Welcome back. You're watching Commodity Champions. We now shift the focus to gold prices. The yellow metal has hit an all-time high above $2,500 per ounce. This is on the back of strong safe haven demand. But here's what we need to watch for in coming days. A likely ceasefire in the Israel-Hamas conflict could diminish gold's safe haven appeal. However, both the parties in the conflict have been giving contradictory statements. There is also expectation of the U.S. Fed rate cut of 100 basis points within this year. All eyes are also on the FOMC meeting minutes, which is slated held next month. Also, analysts expect the metal to hit $3,000 per ounce in the next year. Joining me now to discuss this is Philip Newman. He's Managing Director of Metal Focus. Philip, hi, thank you so much for joining us. Well, there's plenty happening into the markets. Would you say that all-time high of 2,500 an ounce, whether it's about geopolitical tensions, Fed rate cut, all of that has been priced in already?
I think that's really quite fair to say. Obviously, we've got the rate decision is imminent. It seems at the moment, at least, pretty nailed on. We will have that rate cut. I think that has been priced in, such as the level of probability of having rates coming down in the US. And of course, as you pointed out as well, in terms of the geopolitical situation, heightened tensions, especially in the Middle East. So I think those are two, I think, of the pivotal factors that are very much sort of behind the price that we see at the moment.
So if we do take the two scenarios, Philip, 25 basis point cut, which has been factored in, and a 50 basis point rate cut where the probability is also higher. So a 50, if that does come in, then what is your sense for gold prices going forward?
Well, that'd be really interesting. I think aligned to that, of course, will be the language that is around the rate cuts, and what does that mean for the coming months and also for next year. But I think, to your point, I think if we do see perhaps 50 basis point cuts coming, then, we could see perhaps more upside for gold. I think it's difficult to see how far that will go, such as the level where we are at the moment. Investor positioning is already pretty strong when it comes to gold. So I think, I think as well as perhaps seeing more upside, you could see, I think, investor selling into that, making, quite a choppy, quite volatile conditions for the price for the immediate future.
Oh, well, absolutely. So with 20% of gains already that we've seen in case of gold, Philip, what's your sense on prices then? The best case scenario and then not the best case scenario. How would you look at the gold prices ranging now for the rest of this year?
Well, as I said, I think, there are still, in spite of the fact that I think investor positioning towards gold is pretty strong at the moment, quite extended levels. I would still suggest that there is still some money on the sidelines. We are seeing the price, I think, in a very credible level. So I do think there is still room for some short-term profit taking. How low gold will come off, I think it's a difficult one to call, but I think the lows are equally well defended. But having said that, we are in some uncharted territory. Could we have gold in the immediate future fall by I don't know, over $100 or so? I think this is possible. But at the same time, we're still quite bullish on the price. And I think as investors see that, then that would, I think, present a very strong buying opportunity. And then as we move through this year, not only as investors, but as other investors in the market, other interested parties get used to these prices, they become buyers at some of these levels, and that does have the propensity to drive the price higher. So even though, as you pointed out, we've already seen gold hit a record high in dollar terms, I think new highs could certainly be on the horizon, be it this year or into next year. But I think the really key point is it certainly won't be a straight line up. It will be quite volatile. But as I said, I think the lows will equally be very well defended.
All right. Volatile, but more higher highs in gold is what you're saying. So, when we are trading at an all-time high, where would you see the new demand come in from? Because the ETF buying almost did not happen in the last year and a half. Investor demand was strong. Jewelry demand in India and various other countries has been on the stronger side as well. So where do you see the new demand come in?
That's a very good question. Well, I think just to turn that question around slightly, Manisha, we are at these levels, as you would expect, seeing higher levels of recycling in some markets, certainly not on a global basis, but in some markets we are seeing that. So that's something to bear in mind as well. I think the other interesting one is from a central bank perspective. You would have seen the data that the World Gold Council published a short while ago for Q2 that showed quite a meaningful slowdown in the second quarter of this year. But we have to bear in mind that the first quarter was exceptionally strong. And in fact, for the first half as a whole, my understanding is that was a record high for a 6-month period. So I think it will be interesting to see how reserve managers adjust to these prices and start coming back into the market. We feel that they will return as a community as we go through the second half of this year. Our forecast for the full year is around the 800-ton level on a net basis. And yes, that's down on what we saw in 22 and 23, but if we take a step back, that is still a very chunky figure. So in our view, the central bank community will be providing that support to the market. I think when it comes to the coin and bar area, already this year, we've seen very different trends between sort of South and East Asia on the one hand and Western markets on the other. The latter, there's been a lot of liquidations. Net purchases have been exceptionally weak. And you contrast that with the likes of, say, India and China that have been performing, pretty well. So you are seeing those contrasting trends. So I think as we go through this year, I would suspect that we will see the Asian markets to some degree coming in and providing some support to the price.
All right. So as you mentioned India, and with the Indian festival season upon us and the wedding season not too far away, how are you looking at the Indian demand? I'm sure the duty cut of 9% will give a lot of support in buying. But what's your sense? Are you working with the number?
I think that's, absolutely pivotal to that. And I think that the timing, I think from a gold market perspective, I don't think they could have timed it any better, if I may say. So I think that is certainly providing some support. Even at these prices, my sense from my colleagues in Mumbai is that there is that optimism out there for the coming season. Of course, we'll have to see how the monsoon behaves as well. But again, speaking to my colleagues out there, I think there is that level of optimism for the coming months.
A final question then, Olan. How would you look at the US elections in the month of November? Do you see that also as a gold bullish?
Well, of course, with the change, Kamala Harris coming in now, all bets are off in terms of how that will play out. Even just a month ago, the probability was so high that Trump was going to win. What did that mean in terms of perhaps the return of some global instability? So again, all bets are off there. How that will play out. So I think for the time being, I would suggest that isn't perhaps the focus of the market. We'll see how once we get past the Democrat convention, then the next debate between the two presidential candidates, whether that will offer some clarity. But I think for now, it's very much as you just bring it all the way back to your first point, which I think really hit the nail on the head. It's all about rates in the US and about geopolitics.
All right, that point is well taken. Philip, thank you so much for joining us. Well, the bullishness in gold and silver just might about continue. And when it comes to gold, there are way too many factors, as our experts have been telling us, that would tell you not to go short on precious metals, but hold your portfolios on the longer side. But with that, it's a wrap on this edition of Commodity Champions. Thank you for watching.